This is Irontrader. It is Sunday night. Now, the time here is about 20 after 6. The future is open here at 6 o'clock. So we are going to review crude oil here and natural gas. This video is for information purposes only, not a recommendation to buy, sell a stock market ETF. Please like and subscribe. Thanks for watching. All right, here we have crude oil, your daily and your weekly chart. Now you can see so far today we have a green candle, but don't let it fool you. We just don't know. We had a green candle on Friday, it started to be, and then what happened? Lower low. Okay, so let's look at the downside first. So what we're watching here is we have this 21-day at 78.29. Okay, so we're right above that right now. Crude oil sitting here at 78.45. So you're just a scotch above. Okay. Next thing we're looking at here is going to be right there at 78.03. That's your 100-day. Now, Friday, it got as low as 77.96. So that's always what you want to watch, okay? So you want to watch the previous day's high, the low, and the closing. So in this case, you had 79.63 on the high. You had a low of 77.96, and the close at 77.99. So that's all going to be your support and resistance levels here, okay? So watch this key 21 estimate here. Very, very key, 78.29. Watch this 100, 78.03, and then Friday's low at that 77.96. Very, very key. Now, again, if we start losing that, okay, then what we do is we'll come right to the bottom of this candle, 77.57. Then we go to the next candle, 77.34. Then we'll come over here to this candle. You're looking at 76.79, and then we'll come all the way down here. You're looking at 75.84, and then we have your big retest of your 200-day on your weekly chart here at 75.24. Okay, so I always like to point out where it could possibly go. This could rally up here and rip right up higher. But again, if it doesn't, and you lose that key level, that 77.96, that Friday's low, then we just follow the candles down here until you can get a really, really solid support here at 75.24. Now, you can see how solid this is because even though you had, look at all the stickies here, even though you went lower, look where it closed, right above the 200. See? Went lower. It doesn't mean anything. As long as where it closes for the week above that 200-day, that's always what you really want to watch. Now, here, last week was really not too good. Look at this big ass red candle. Okay, so what we have here over the weeks here is you had a high of 87.67, and then we came down here with a little bit a higher high, 77.63, I should say, and 77.67. But that was that double top situation. See, right there, double top. Okay, that's never good. And then we just had that series, of lower highs and lower lows. So now what we'll do is we're looking for a bottom. Okay, now again, if we can hold that 77.96, that would be very, very good. But what we're really looking for is a candle like this, okay? See that bottoming tail? See this candle? Now, they don't all have to look the same. This is a cross. That looks very different. But these are all bottoming candles, okay? See that? And then once you get that bottom, then she can rip higher. Now, look how it is when it tops. See, when it's just reversed, double top, boom, down she comes, okay? Now, I did have a question here in the chat about these blue lines here, okay? So realistically, what these are is these are price channels. And the price channels are really, really good because what it does is it just shows you like the tops of the candles, okay? So you can see where this is 70, high here was 87.63, and then it notched up. Okay, so that's all it's doing is just showing you the top of the candle. It's just like, well, say on the way down. See how this is? Well, that's all that is it's the bottom of that candle. Okay, right across here, the bottom of that candle. Same way here, you just come over here, the bottom of the candle. But the reason I put these on the chart is, see now you can see very, very clearly, say, okay, I lose this support. Okay, I lose that 77.96, okay? Well, once we follow these candles down, then all I do is take this price channel, come right across, boom, there's your support. Then I go to the next price channel, bring it across, boom, there's your support. Next candle, boom, there's your support until you come all the way on down. But that's all it is like the tops and the bottoms of candles. But it really works out very well because when you look at the overall chart, you say, wow, it's easy to see. Now I know what this guy is talking about here. Yeah, there's your support. There's your support. There's your support, okay? That's why you want to watch price shots. It's the same way with this. What you have here is when you use these price shots, as it rallies up, we're going to pull right back down. But what you do then is you watch that candle okay? And once you break above, then you know you're going to go higher, okay? Same way with here. You'll look at that candle, you say, oh, 80, 85. Now I got to get back above that, boom. Then I know she's going to go higher, just like here. But then it's also very useful like this, where you had that candle rise up, and then we came within 3 cents. Oh, perfect double top tells me I got to go short ski all the way on down here, okay? So that's all it is price channels. But I like to keep the charts very, very simple. I've traded many ways, complicated and this and this. It just doesn't work. Keep it simple. I use the price channels. You can also use Bollinger Bands. You can use clouds. I just found out that these are really more accurate because all they are is just the tops and the bottoms of candles. Very, very simple, okay? This blue line, that's your 8 simple moving average. This is 21 simple moving average. Your 50 days, the green, that's a 50-day simple moving average. This is your 100-day, which is your purple, and your red is your 200-day, okay? I just use volume, RSI. That's very, very good because all it measures is your relative strength. But what I also like about this is it can sometimes do divergences, which is always very good here also. That's what you always want to see is divergences, okay? And MACD, well, that just shows momentum. Right now, the green is below the red. That shows momentum, yeah, to the downside, okay? When it crosses back up, then that's momentum to the upside. So I just try to keep everything really, really simple. I think that's the best way to trade. I just find out that you can make a lot more money the simpler you do something versus all these complicated strategies and everything. But again, if that works for you, great. It just, for me, I just say I've traded for so many years here. Simpler you keep something, the easier it is to make. Okay, so just remember here on the downside, watch this key level here. That's at 77.96. That's Friday's low. We always want to keep in mind this 21-day, 78.29, and then that 100-day at 78.03. Very, very key. Now we have to look at how we're going to do on the upside. Well, first of all, what you want to watch is always watch this key level, which is the 50-day. Okay, so that's 78.95. Very, very critical. Okay, so then what we can do is we can just follow these candles. So you want to look to the bottom. You got 78.83. Then we can follow this candle here. Look to the top of that. That's 79.63. And then we come over here to this indecision candle, 79.90. But this is what you're looking for, that 80.14. Okay. So again, we might have a trading range here. We had one here between the 50-day and your 8-day, and then 50-day, your 21-day. Now we might get one between the 100-day and the 200-day. Okay. Might. Who knows? We got to see. Again, bottom line, as long as you can hold that 77.96, then you got a good shot of this going very, very high. Now remember, a lot of rallies, which is probably about 90-some%, rallies start with short squeezes, okay? That's the key. So this is why I always look for candles like this, because what happens is it sells on off and people think, oh, this is going to go lower. And then the buying comes in. Well, then it squeezes the shorts. The shorts got to buy. Boom. Where'd you go? Up. Okay? So always remember, rallies start with short squeezes. Okay? So let's just look at the upside. We want to watch this key level, 78.83. You want to watch this key, 78.95. That's going to be very, very crucial. And then we just follow the candles, 79.63, right there, 79.90. But what you're looking for is this 80.14, your 200-day. Now, again, when you get up there, this is a selling opportunity. So if you're taking a long here, just remember, sell at least half your position into the 200-day because it's not going to blast through there the first time. These are brick walls, okay? Another thing you have to look at is this 8 SMA. See, now you cross the 21-day, you cross the 50-day. That's never good, okay? If it crosses that 200-day, that's going to become very, very big time resistant levels here, okay? Just like what we had here, okay? So when the price goes above it, that gives you nice support. But then when you rally up to it, like we have here, then you're fighting it, look at there, the whole way until you can get and close back above, okay? So the 8-day, very, very crucial level there, okay? So let's just watch here on the upside, watch these candles, but realistically, what you want to watch is Friday's low, 77.96, and this 80.14 here on the upside. That is going to be very, very key. If you can get above, then you got a shot at that 8 SMA, which is 80.80. But we don't know that yet, okay? Now, there's a lot of resistance above that because we can start right there. 80.70, okay? 80.88, and then what do we have here? 80.95, and then you can come all the way up here to your 81.80, which is your 50-day. But realistically, to turn this back bullish again, you want to have that, you got to get the price back above that 8-day and rip it right back up, just like what we had right here. Okay. okay? So as this sold down, you have all these red candles. Then we had that reversal candle. But look how that 8-day rolled. See that? Then once you got above, what happened? She just rallied up very, very nicely. But when you're below that 8-day, tough. Very, 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 very tough situation, okay? So watch right there, okay? 77.96, and then watch that 80.14 here on any kind of a rally going up. Now, again, this head and shoulders pattern played out here pretty nice, okay? See, there's your head, there's your left shoulder, there's your right shoulder, boom, 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 and down, okay? So I did a video here over the weekend, weekend edition, and we did again on candlesticks and on chart patterns. It's right on my playlist. You can look at it anytime you want. You can just punch it right on up and say, hey, you know, got a little bit of refresher. I do it all the time. No matter how long you trade or, you know what I'm saying, or how good you think you are, it's always better just to say, hey, I'm going to do a little refresher. I'm going to look at some chart patterns. That way you can see the chart pattern, because a lot of people look at this and say, well, what's the big thing? Well, not really. Because see, you can see that left shoulder, that head, and that right shoulder, and then boom, all the way on down here, okay? So just take a look at it, you know, always keep nice and fresh and keep alive. Okay, let's take a look here and see what's going on with natural gas. Okay, here we have natural gas daily chart. Look at this, okay? So we've had some really good sideways trading action, okay? So now, right here, I want to point out this was the contract roll, and look where we went all the way to the bottom. Here was another contract roll. It rallied on up here, but you notice that we did eventually fill that gap, okay? Always look at filling them gaps, okay? But now, when this left a gap here on the upside, that's actually very bullish here for us now, because now, a lot of times when you rally up here, let's see what today's high was so far, okay? Your high was 2.182. Now you're already above that 2.168 gap, okay? So now what your next level is what you're looking for. It just go to the left of the chart here, okay? Look at the low, 2.23. That's your next resistance. What do we have here? 2.27. That's your next resistance after that, and then 2.29, okay? And then what we do is we come here. What do you got? 2.31, and then we have 2.32, and then we can come right over here into all this layer right here. You got 2.38, and then this is your gap fill right there, 2.42, okay? So there was your gap. Now today so far, we are in that gap, okay? You can see where Friday's was. We had Friday, you had 2.16, and you went right there into these candles, okay? So you went to the gap, but now today we're in it. So your big target is going to be, we can follow the candles, but your big target is going to be that gap fill at 2.42. Okay, and then right above that, what do we have here? Is you got this nice 200-day sitting at 2.47. So if this rallies up higher here, you know, and it keeps on going, that's going to be your big target at 2.47. Now your RSI here, you're looking very, very good. You're only at 65. This here, MACD, see your green is above your red, showing bullish, yes, to the upside. Looking very, very nice. Now, let's always look to the downside, because that's going to be key, okay? So if this comes off, what you want to do is you want to watch the top of this candle. This is 2.09. That is very, very critical, because this is the candle that we broke out of on Friday to the 216, okay? So that's very, very key. Now, if that is lost, then we'll come over to the top of this candle. This is that 2.056. Very, very key. And then we have a 2.05 right below that. And then we'll come to Friday's low sitting at 2.01. And then right below that here, you have that nice 8 SMA sitting at 1.979. Okay, so again, if that's lost, you have this 21-day, 1.85, and then you have your 50-day right below that at 1.80. But look at your 8-day now. You crossed above your 50. You crossed your above your 21. Very, very bullish, okay? Example, right here. Once it crossed that 21-day, where did that price go? Right on up. What does that happen when that price is below, okay, the 8-day? Look what happens. See? All the way down. When it gets above, she rallies up very, very nice. So if this pulls down, you're still in very, very good shape. Now, another one you want to watch here that is just below that 2.09 is going to be this 100-day at 2.08. Okay, we need to really close above that 100-day. That would keep this here in a very, very bullish scenario. Now, again, if this candle here comes all the way down and you hold it, that could be a very good buying opportunity, okay, to run it much higher. Now, what you always want to look at is different chart scenarios. Okay, so if you're trading, use a tick chart. A 1 and a 5 work really good. If you want to say, hey, I want to take the trade out a little bit, you can use a 15-minute and a 30-minute chart, or an hourly and a 4-hour chart. But always, I mean always, look at a daily, a weekly, and a monthly chart. Okay, every day, make sure that you're working like this daily here, so you know this is all your big time support and resistance levels. Okay, so just quick again here, this is what you want to watch. Is you want to watch obviously 2.16, and then we want to watch just 2.09. Very, very key. And then we have 2.08 right below that. Then we'll come right to that 2.5 level. And then what we do is go yesterday's or Friday's low, I should say, 2.01, and then that 8 SMA at 1.97. But if this can keep cranking up here and get above that 100-day, this could push that price right up very easily to that 200 SMA here. Okay, remember, upside, this is what we got. We're ready into that gap now. So always watch these candles here. That's your resistance levels until you get to that fill at 2.42. Okay, let's take a look here at a weekly chart. Okay, here we have the weekly. Now this weekly is looking very, very nice. Okay, so you look at your MACD, your green is now above your red, which shows positive momentum to the upside. That's what you want to see. You don't want to see that green below that red unless you're short. You know, you get positive you get the momentum to the downside, and this is what you get. Okay, that other one, see where it just kept on flowing? This is what you get. Okay, so when it crosses above, then we have that nice rise going right on up here. Okay, so what we want to do here by the week, which is going to be next Friday, so you got a whole 5 days. You really want to hold this key level right here. This is that 2.095. That is your 21 SMA. And then what your next level is we want to hold is this 1.87. Okay, so these are very, very critical by next Friday that you need to hold on a closing basis. If not, then you can come all the way back on down again. Okay, but again, if you hold it, we have this nice target here. After you get that gap fill at 2.48, which lines up very, very nicely on the daily chart, okay, with that 200 SMA at 1.47. So that is going to be your upside target. Okay, so again, you're not going to get through there the first time unless there's some kind of a huge catalyst that's going to blast it up. But usually you don't good, and usually it stops at its tracks, just like what we had here. Look at this candle, see, where you go right up into it and then it pulls back. Another perfect example of these SMAs, see we have the candle right into the 8-day, pull back, into the 8-day, pull back, into the 8-day, until you can get back above this. Even though on this candle you went below it, you still closed above that 8 SMA here. Very, very bullish, okay? So always by Friday, watch that key level, 2.095. If that's lost, then we have that 1.87. But if we can hold that, then we got a good shot at this running up much higher. Now, we're going to take a look here for natural gas on a 5-minute chart. Okay, 5-minute chart. For me, I love trading the 5-minute chart. This always was very good. Okay, so last Friday, what we had here is we had this was just a really nice setup, okay, going on right here. Okay, so what do you have? You had a low, we had that higher low, and then we had that higher low. Very, very key. And then I was looking for this candle right here. This is that 2.056 that we need to crack above. Once you crack above that, well, then she's gone. Okay, so here we had either a nice good W pattern, a nice good double bottom situation, ran up and then closed sideways. Now you can look at today where you're breaking out nicely above that. That's the key. Now look where your 8-day is. Now your 21-day and your 50-day are all bottom left, upper right. That's what you want to see. Now, even though this RSI here, but this is a 5-minute here, you can go above. That's really no problem. All that shows is you got really big ass strength. That's what that means. Okay, so that's what you want to look at. Your MACD, your green is over your red. Very, very good. That's what you want to see is bullish momentum to the upside, obviously, if you're long. Okay, so let's just see how this all going to shake out here. But try to use a 5-minute chart once. Just put it on there. You don't even have to put no trades in. Just watch the 5-minute chart and just see if it works for you. Most of the time, it'll work very nice right here. But when you start getting these patterns like this, you know what I'm saying? And that series of higher lows, that tells you got to get your ass into that trade and take that bad boy long. Okay, that always seems to work. Okay, that's what I got for you. A little crude, a little net of gas. I'll be back here tomorrow morning before 8 o'clock, and we're going to do it all over again. Okay, thanks for watching.